Hey everyone, an accounting trick. Are they duping you? Are the banks actually pretending, that, hard times are coming to them and that they need to survive and things are going bad for them and it's all a problem and please have some sympathy. Oh, and wouldn't you mind bringing a sugar lump for our black horses? Yes, I'm talking about banks and the way that they manipulate the media to try and get you on side and hide what they're up to.
Welcome to the best business show in the world.
And it's an accounting trick. So I'm just going to say that today's episode is all about, I'm going to write it on here, bank tricks. Okay. And I'm going to explain what I mean by a bank trick. So let's put the light on there. Okay. Can you see that? Hopefully. Bank tricks, and they're out to get you and me with it. All right. So, welcome to today's episode of the Best Business Show, and I'm also tying this into the other podcast I do, which is How to Raise Money with myself and Ray McLennan, another great podcast. What am I talking about today? Well, in the news, I'm going to try and share the screen here, so bear with me. Okay, hopefully now you can see that we're looking at a news headline. So this is from Sky News. All right. And it says, Lloyd's profits fall 95% as UK economic slump looms. All right. So here we go. The UK focused group. So what they're doing, they're talking about the bank has put aside 1.43 billion as it prepares for a big downturn expected to squeeze its customers. This is today, 30th of April. So what is this message going out? The message going out is, right, let's go back a step. In terms of coronavirus business interruption loan scheme, okay, the banks were asked by the government, said, right, we've got 300 odd billion. Please lend it to people who need it. What are the banks been very bad at doing? They've been extremely bad at actually organising that money and lending it to people who need it at the moment before things get so bad that everything fails and their business goes pop and any loan given to them at that point goes bad. Okay, so lend money sensibly. However, when you lend money, does that mean that all the money that you lend is going to suddenly go bad because of this? No. But what do banks do? They do a nifty trick. And this headline has been all over the news all morning. 95% of profits have gone. But it's only for quarter one. And Lloyd's are still saying that they're going to make a profit. How many businesses out there at the moment in coronavirus land are saying to themselves, hey, never mind, we're not making a profit. We're going to make a huge loss and we're actually going to go out of business. There's going to be a lot. So why are they doing this? They're trying to get sympathy, is my opinion. And I think they're trying to say, hey, look, we banks are suffering just like you. Oh, hey, we're arm around your shoulder. We're struggling just as much as you. This is the problem that we've got. And I'm not too sure about that. So I'm kind of looking at this thinking, look, arm around the shoulder, the banks, should we have sympathy for them? What's actually going on? Have they really made a loss? Or is it an accounting trick? Well, I'm putting my money on the fact it's an accounting trick. Why? Well, let's go back to the article. Okay, so let's have a look here. Lloyds Bank, let's go down. Lloyds Bank Group's reported 95% fall in first quarter profit as it counts the costs of coronavirus to the economy. Is that really? So they're only going to make 74 million for the first quarter. All right, so who's going to be upset at that? Shareholders, yeah. And we are possibly all shareholders through our pension funds or our life insurance and other big financial institutions that invest in these big companies. So we have a vested interest in them. What are they doing? Well, here we go. This time last year, they made 1.6 billion. They've now, hang on. They haven't actually lost the money. What have they done? They've set aside 1.43 billion to cover the expected slump caused by the coronavirus pandemic. So what does that actually mean? So let me just get me up on here. So let's see if I can get myself to appear on the screen as well. Hold on a second, so I can see you on here. Right, where? Oh, what have I done? I need to get myself on here. Never mind. Let me come back. I'll come back to the stuff. So let's go through it. 1.43 they've set aside. They haven't lost the money. Okay, 1.43 they have set aside to do this. All right. All right. So what have they done? They've set aside some money. Okay, so over there, you can see 1.43 billion they've put in there. The group that also owns Halifax Bank of Scotland as well as Lloyd's could see the economy shrink. All right, so they've put something in there about the economy. All right, I see that. Now, what have we got here? Chief Exec Antonio Horta Osario said the economic outlook is clearly challenging, uncertain, longer-term outcomes dependent on severity and length of the coronavirus pandemic and the mitigating impact of government and other measures in the UK and across the world. What are the mitigating circumstances? CBILS, Coronavirus Business Interruption Loan Scheme. Okay, so the mitigating circumstances to avoid this are the government says we'll back you 80%. Banks lend this money out to people so it keeps them going, keeps the economy going, and we don't have as big a drop. Sounds good, yeah? Okay, and the bank is even saying it depends on what people do. But woe is us, they say, because banks across the world have been putting money aside. Look at this. What have we got? Setting aside billions. I'm going to come back to that. Setting aside billions with the economic impact of the global crisis. All right, Barclays taking 2.1 hit, they say. HSB saying it could cost up to 11 billion. And then you have a dramatic picture of boarded up banks and all the rest of it. The sums account largely, here's the thing, the sums account largely for the increased likelihood of impairments, i.e. borrowers defaulting on loans. Right, let that sink in a minute. These sums that they are setting aside are for the increased likelihood of impairments, that's borrowers defaulting on loans. So hang on. They haven't lost money yet at all. They haven't lost any of these billions yet. What do banks do? They do an accounting trick. What you do is you say, I'm going to take a pessimistic view of what's going on. And I'm going to take all those losses that might happen in the future, and I'm going to pull them back right now. And I'm going to pull all those losses from the future right back now, report them now, have all my bad news done here today, and say that 95% of my profits have gone. So you hit them with absolutely, you pre-frame people with massive losses, and you say, all right, it's going to be terrible. Woe is us. Woe is me. Woe is the bank. You should all feel sorry for the bank because look at this. We're not even making, well, we're only going to make a small profit. So, but what are they really saying? They're saying we're taking an extremely pessimistic view. Why? Because at some point in the future, when perhaps things don't pan out quite as bad as they thought they might, they can suddenly reveal to the market, reveal to the stock exchange, they can reveal to their shareholders, and they can reveal to the wider world, hey, do you know what? The coronavirus outcome wasn't quite as bad as we thought. And all those people that we thought would default on their loans, not all of them have. And lo and behold, what? Maybe 70% of people didn't default, maybe 30%, so it's still a big hit. What do they do then? They release back into the accounts as profit the 70% of the 1.43 billion they've just set aside at the moment. What does that do? Well, that puts about £1 billion back into their profits, and suddenly the share price goes up. Suddenly things aren't so bad, and all this bad news that is today, trying to get our sympathy that the banks are in it with us and all those sort of emotions, so that their black horses can run across frozen lakes and things like that. All that sort of, oh, woe is us. Suddenly, we've forgotten about that. And when they announce a big increase in profits, you sort of go, oh, wow, oh, really good because those banks have absolutely shafted us but have made money. So what are they doing? They're trying to do an accounting trick, which is look to the future and say everything's going to be awful. Take all those losses in the future right now and write all your profits off. What does that do? Well, if you write your profits off, you don't pay corporation tax either, do you? So if you say we've had a terrible year and we're predicting this and we're writing off all these future profits that we thought we were going to make and we're going to make an enormous loss, bring it into this year, you pay no tax. Because what's the tax on 1.6 billion compared to the tax on 70 odd million? It's a big difference, isn't it? And what does that do? That helps cash flow. And what's the accounting trick? The accounting trick is just a paper exercise. They've said, we think this will happen. The accounting rules allow us to write that off at the moment or put a provision against it so we can, get rid of all those big profits. We don't pay the corporation tax, and there you go. Happy days. And then in the future, when business is picked up again and maybe cash flow is better for the bank, or they're in a position where they can do that, they will then declare the profits. They'll drag that money back in because loans haven't defaulted as they thought they would. Their profits go up and they can pay the corporation tax at that point. So you get a timing difference on your corporation tax bill. You also get an element of sympathy for the banks, because I'm going to go back to the article. Now, what's in the article that is really quite outrageous? Okay, here we go. It's this little bit at the bottom. Lloyds, as Britain's biggest mortgage provider and one of the biggest lenders to business, is seen as a bellwether for the domestic economy. It said, given the group's clear UK focus, its performance is inextricably linked to the health of the UK economy, and the group will inevitably be impacted by the nationwide lockdown related to coronavirus, which has already started to have a significant impact on the UK economy. So far they have told us nothing. Okay? And so what does that phrase, that paragraph actually mean? Nothing. It doesn't mean anything. It has nothing to do with the bank or what's gone on at the bank. It's just giving a general statement about potentially what the economy might be. Okay, other things that then go in there. Shares were 4% lower in morning trading. All right, fine. There you go. But here we go. Britain's banks have been criticised for slow progress in their role supplying 330 billion of state-backed loans to businesses hit by the pandemic. These are the CBILS, the Coronavirus Business Interruption Loan Scheme. And here it is. Lloyds give a fact and a figure about something which is irrelevant to the CBILS. But what it says is they provided 880,000 loan repayment holidays across all its product lines and issued 3,752 loans totaling 500 million via the Coronavirus Business Interruption Loan Scheme. So they put a massive figure in, 880,000 loan repayment holidays. And what does that mean? They might have given someone a month off, 3 months off. It doesn't mean they've waived the loan. It doesn't mean the loan has gone bad. It means they've given them a holiday to help them. But on the CBILS point, 3,752 loans totaling 500 million. They have 330 billion to put out there. 330 billion. So what is that? That is a fraction. I'm going to get my calculator out here because there's a lot of zeros on that. So that is 500 divided by 330. Yeah. So that is a fraction of a percent. A fraction of a percent a month, 6 weeks into this. And it says here, it is still lagging behind rivals NatWest, HSBC and Barclays, despite being Britain's biggest provider of loans to small companies. The Lloyds results came in here as the latest figures from industry body UK Finance, who kind of the umbrella under which all this CBILS has been done, showed the sector had provided a total of 4.1 billion in loans through CBILS so far. So 4 billion out of, so 4 divided by 330 is 1.2%. 1.2% of all the money the government says it will effectively guarantee has been lent out. How bad is that? That is just appalling. It said just under... Here we go. So it said just under half of the 52,807 completed applications received to date had been approved so far. Okay. So it's got 52,807 completed applications. And by the way, most applications fail before they are put in because they get rejected on various grounds of you can't apply. And that's what it's received today. And had been approved. So half of those, so that's 26,403 and a half of those applications. I always like a bank that say that you can have half an application approved. Anyway, 26,400 odd applications have been approved. And yet only 3,752 of those loans are actually being paid out. What the hell is going on? Well, that's the crap news. That's what the banks are actually up to. This is where they are at. And bear in mind that if you lend this money out and the bank is saying their headline is, we're going to lose loads of money because these loans won't be repaid. Hold on, the government is backing these loans to 80% and some of them to 100% now. That means that if the bank does lend this money, it can't lose it. So it wouldn't lose money on this business effectively because it would still be charging an interest rate, and for any of those loan repayments it would be covering its money. The government guarantees it. So what the hell is going on? I tell you what the hell is going on. Down at the bottom of this article, they are saying the banks are appalling at the moment at lending money out under the CBILS, and businesses are crying out for this money. They are saying, look, we are 2 months into this. We have run out of cash. The business is going pop. We rent our premises, rent our offices, rent our space, and we are not going to be able to pay landlords. Landlords will not be able to afford to keep up the repayments on the property that they own, almost certainly through mortgages, and everything starts capitulating. And it all starts with the fact that the banks won't lend government-backed money out fast enough. So what's this article all about? What's this headline all about? This headline is about the bank using a trick, what I call an accounting trick. So one of the bank's tricks is to use accounting and accounting methodologies to make themselves look like they're in a terrible situation. Please don't put pressure on us because we are losing money hand over fist, when actually it is not money that they have lost yet and may never lose. It is money they have set aside on the basis that they have an extremely pessimistic view of the future. And when that future does not pan out quite as bad as they think, then they can release that money back into their accounts and lo and behold, they make profits. What am I talking about? I'm talking about manipulating the system, the media, and profits, timing, cash flows, tax take, corporation tax payments to suit their agenda. Now, that's pretty powerful stuff. It's just my opinion, and I could be completely wrong. However, that is how I read this situation at the moment. And I think it is pretty shameful of the banks to try and manipulate the media and manipulate our opinion of the banks in order to further their agenda, which is to hide from the fact that they have been absolutely appalling so far. And you've got time to improve it, but you've been absolutely appalling so far in helping small and medium-sized businesses because you are just not acting quick enough on the government coronavirus business interruption loan scheme. So there we are. Have Lloyds really lost 95% of their profits? No, have they? Buggery. Have they used accounting tricks to mask it and hide and let the bank use accounting tricks to to trick the public into thinking that they are in a situation they are not actually in yet? Absolutely they have. And I think that is deplorable. And I think it needs to get out there that people need to understand. And I think journalism is so bloody lazy at the moment. They don't come back to, journalism. They get a headline, they get given a press leak or a press statement, a press release from the bank, and it says, look at this. We've lost 95% of our profits. We're in this with you. We are suffering as well. It's cobblers. And if the media knew anything about just being able to interrogate figures a little bit, just a little bit, they would see that this is a smokescreen for what the banks are not doing on C-bills. And there we are. That's my take on it. I could be, and I bank with, pretty much every bank there is out there. We've got accounts with a lot of the banks out there. And the trouble is there's nowhere else to go. These banks can do what the bloody hell they want because we have no other options at the moment. And I keep opening different accounts thinking this bank will be different, and they're not. And it's clever. It's clever use of accounting rules and regulations to put these tricks in. It's an old trick of the banks to try and do it, to try and get you and me to give them sympathy, lay off them and say, all right, you're not lending this money under C-bills. Don't worry, I can see you losing money. It's cobblers. It's cobblers, folks. You need to see behind the smoke screen. I'll blow that smoke screen away and I'll look behind. It's like the Wizard of Oz. Pull the curtain back and who do you see? It's not what you thought it was. It's not the wizard. It's not the great Wizard of Oz. It's a bloke with a microphone and he's sending you a message trying to get you to think a certain way. So there we go. There's my little rant for the day. Hope you've enjoyed that episode of the Best Business Show, and I'll send it across to Ray for his comments as well, so we can put it on the How to Raise Money podcast with myself and Ray McLennan. But if you see headlines like this, think, why have they told us that? What are they really trying to do? And is there something behind it that I need to know a little bit more about? It's those sort of questions that stop people taking things at face value. And the media, unfortunately, are rubbish at looking just behind the headline. But there we go. My name's Nigel T. Best. I will see you very soon. Take care, stay safe, and good luck if you're trying to get a C-bill loan. Bye for now.